What is underwriting? To put it shortly, underwriting is a process wherein someone agrees to take on a financial risk in exchange for a fee. It's a central function of insurance companies. The underwriting department of an insurance company figures out which financial risks are appropriate for the company to take. They also figure out how much the company needs to charge to cover those risks, which is another way of saying to pay for claims. And after they cover claims, the company still needs to have enough money left to keep the business running. So, the risks we're talking about are the stuff that's getting insured. Houses, cars, businesses, and so forth. Let's stick with home insurance. When you buy a home insurance policy, the insurance provider accepts the risk of insuring your house. The risk being that if your house is damaged, they need to help cover the costs of repairing or rebuilding it. Chances are, the amount you paid in premiums over the years is a lot less than the value of your house. The underwriting department needs to balance the company's risks against their income to ensure that they can pay their customers' claims without going out of business. That means calculating the relative risk of different homes and charging higher or lower premiums accordingly. There are a few things that the underwriting department in an insurance company handles. The first thing is the underwriting guidelines. Underwriting guidelines are general rules that the company follows when deciding whether they want to offer someone an insurance policy. Every company does it differently, but there are a few common factors across the home insurance industry. For example, the home's age, location, and size are important parts of the decision-making process. Underwriting looks at factors like these and calculates the relative risk of that home. Then they decide how much premium they need to charge to make the math work out. Or they might decide the home is too risky and decline to offer a policy at all. Of course, most insurance companies like having customers. So underwriting departments try to insure as many people as possible while keeping costs low. This brings us to another function of underwriting: reviewing insurance applications, especially those that don't quite meet the underwriting guidelines, to insure homes slightly outside their ideal guidelines. Here's a quick example of that. Imagine a homeowner named Olivia, whose house is in an area known to flood every few years. As a result, she has a tough time finding an insurance provider willing to cover her house. She finally finds an insurance provider willing to work with her. Olivia's home meets all the underwriting guidelines, except for the flood part. So the underwriter offers a solution. They can insure Olivia's home like normal, except if she makes any claims for flood-related damage. She'd have to pay a $5,000 deductible only on flood-related claims. That means she'd pay the first $5,000 of any flood damage repairs before the insurer pays the rest. Other than that, her policy would work just like any other home insurance policy. Her standard deductible of just $500 applies to other claims. $5,000 is a lot, but now Olivia has great coverage for everything not flood-related, and it's certainly better than having no insurance at all. So, that's one example of how underwriting works. If you'd like to learn more about underwriting and similar parts of the insurance writing process, we've included some helpful links in the description below. Or you can click the link on the screen to get a home insurance quote from Square One. Thank you for watching, and I hope you found this helpful. Are important parts of the decision... You can click the link on the screen to get a home insurance quote. Blah, 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 blah. Oh, what is wrong with me? The company still needs to have enough money. It's not a sentence.